Now, most people agree that the next few years look strong almost no matter what. We still have really strong sort of a tailwind left from growing streaming penetration. But over the sort of 3 to 5 year horizon, we're starting to get a little bit more uncertainty. Just how high will the peak ceiling penetration growth, so the subscription penetration rates be in developed music markets? How much pricing power is there for music? And what happens in areas like ad-funded streaming on social media? So not to mention these risks from indie labels or, for example, contracts signed with the streaming platforms. So it looks like, at least in the short term, very, very, very little is going to derail the kind of streaming revolution, but after that, it's starting to be a bigger question just how justified these valuation levels are.
Matti, what about the costs of retaining this this talent as well? I mean, I'm just looking up J Balvin now as well. Fascinating. There's 35 million records sold, albums and singles. These are big stars. But in terms of the cost of the talent as well, we don't want to turn into the football club investment scenario where you end up basically passing on all your profits to the talent.
Yes, exactly. I mean, what streaming has done, it's increased the value of music catalogs, and the artists know this. And you have, particularly on the publishing side, you also have sort of new types of capital coming into the industry. You've followed Hypnosis, the sort of music sort of asset collection company. So this kind of investment coming in, recognition in the value of the streaming catalogs, means that artists are negotiating harder than ever. They want to retain their share of equity in master recordings. They're pushing hard on compensation. They want to make these big special deals with UMG just so UMG can keep representing them. And we don't know the exact cost of these deals, and it's very hard to predict returns on them. But as I mentioned, in 2020, 1.5 billion net content costs. Part of that was for the Bob Dylan catalogs of old, but an unknown but a considerable portion would have gone to these top artists just for to keep them on for another few albums. And we expect that every few years you have a new kind of crop of top artists demanding their cut, and it's very hard to say just how much in capitalized investments the likes of UMG will have to put in to maintain their market leadership. As a reference figure, since the current CEO Solution Grange took over in 2011, UMG has spent over $10 billion in this kind of investment, and their market share is exactly where it started back then in both recorded music and music publishing. So is it the case that they just have to spend an unknown but very large amount of capitalized investment every year going forward just to retain the current market share? And currently, it would definitely seem so.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.